Hello and welcome to today's video about Ethereum. Very, very big news coming for Ethereum. We all know about the ETH 2.0 merge. Let's have a quick look as to what exactly this might mean. Put my little self down in the corner so we have all of what's going on. Basically, the bottom line, guys, is we're going to see massive amounts of money moving into the Ethereum ecosystem as institutional investors begin to think, is this as good as a bond? And why, in fact, if I get a guaranteed return, am I buying bonds when I could be buying crypto? Let's have a look at what needs to change and how we might get there, guys. So this was a coin analyst. That is strangely worded. Guys, I might just give up. Chainalysis. There we go. So how the Ethereum merge may impact crypto ecosystem, on-chain indicators to watch. Now, what I want to show you guys is as we move into the Ethereum 2.0, should we say era, this goes through, what it is. I'm not going to explain, blah, blah, blah. One thing I will mention, 32 Ethereum, that is what you need to become a validator. Keep that in mind for later on. But basically, I'm going to be taking this on the angle as like institutional investors could be moving into this space. Now, one thing that is worth noting is users have already staked more than 30 billion worth of Ether on ETH2 blockchain, which is crazy because that's the most ever, more than anyone apart from ETH1, but actually no, it's the most ever because ETH1 is proof of work, so it's literally the most. And we have a graph down here to show us this. Total staked value, ETH 2.0, then you have Solana, looks kind of measly up against, around about a third of the size, just beating out Cardano, and they have Polkadot, Polygon, Cosmos near, secret. I know that is a thing. It's not just like, hey, we're not going to tell you. But some have staked directly by setting up their own validator nodes, which requires specialized hardware and software and hardware in addition to 32 ETH. Now, 32 ETH, guys, I mean, what's the price of Ethereum right now? It's actually, what was it? Like, what? How do I not know the price of Ethereum? There we go. Okay, just was going to show you this. ETH USD, exact price, just around, just over that 1.5k. So obviously that's not really going to be that expensive. You're probably looking at what, 45, maybe, something like that, maybe like 40, just 45 to 50 Ethereum to become a validator. Look, sorry, $45,000 to $50,000 to become a validator on the Ethereum proof of stake chain. Now, obviously, this move to proof of stake will make Ethereum more eco-friendly. And this is something that's really, really big, guys. These big hedge funds and institutional investors, they can't just go and spend money everywhere, because then the fund starts to look bad. And then you actually have a score called an ESG score, and a fund will be allocated a score depending on if they invest in cigarettes and oil companies versus if they invest in renewable energies, because obviously, there's even a little bit of morale and, should we say, human decency on Wall Street as well. You might not believe it, but you heard it here first. Another thing I want to point out is right now, Ether staked directly on ETH 2.0 is locked in the contract and cannot be withdrawn. One thing that's really interesting, though, is the Shanghai upgrade planned for 6 to 12 months following the merge, which will allow users to withdraw staked Ethereum at will. And that's going to provide massive liquidity, guys, massive amounts of liquidity. Because imagine you can stake, and this will be almost like a bank. Like a bank, you put your money in, and then you're like, okay, well, the reason why I like a bank is because I can get my money out, and it's guaranteed, all the time. Well, obviously, the price of Ethereum versus your fiat will change as the price of Ethereum changes, which could be a very good thing. But to be able to take your money out of Ethereum after you've staked it is going to be massively appealing, not just for the institutional guys. But as we see, we move down here. We've written before about how the prices of crypto assets like Bitcoin have become more correlated with those of tech stocks and other high risk, high upside assets. This is something we preach. As you guys know on this channel, we know this. We've known this and said it for ages. However, this is where the change comes. Ethereum's price could decouple from other cryptocurrencies. So some predict that between staking rewards and transaction fees distributed to validators, stakers can expect Ether yields of 10 to 15% annually. So you stake your Ethereum, you get 10 to 15% every year, and you can take it out whenever you want. Hello, this could be really good as like a nice little vehicle to get your money into. Now, those returns could make Ethereum staking an enticing bond alternative for institutional investors. For comparison, yields on 1 year US Treasury sits at 3.5% as of September 2022, though that number has been rising over the past year. And so we can have a look, further down here. One thing that is crazy, number of wallets staking institutional amounts of $1 million plus. So this is why I said 32. It's like 50 grand to be a validator. So, this is only the million plus. So obviously I imagine they're not just going to be contributing to a staking pool because they can afford to become a validator, should we say. So there's definitely a correlation here as the number of wallets staking institutional amounts has massively increased just over this just over like a 1 year period, moving from about 200 addresses up to 1,115, I think it is. It will be interesting to see if the number of institutional size stakers increases at the faster rate following the merge, which I think that it absolutely will. And then we go further down and there's not really anything that I want to mention there. But just quickly, guys, what's a bond? Something some of you will or won't know, but a bond is a debt security similar to an IOU. Basically, borrowers issue bonds to raise money from investors willing to lend them money for a certain amount of time. Basically, when you buy a bond, you are lending to the issuer, which may be a government, and in return, the issuer promises to pay you a specified rate of interest during the life of the bond and repay all of the money you gave them up front after, once it matures or comes to the end. So it's like, hey guys, look, I need £100, but I will give you £2 every month, for a year. So you'll be up £12, and at the end of the year, I'll give you your £100 back. So you cannot lose unless someone defaults on their debt, which doesn't happen with the US government. So let's have a look. This is the correlation between Bitcoin and bonds. Now we see that this is kind of growing, especially in recent months. So we can see as this is the bottom one is the bond, and this is obviously the Bitcoin chart that we all know and love so very much. But as bond yields didn't really do too much, a slight move to the upside, but obviously Bitcoin was going absolutely crazy. And this is where they're moving together for the most part, I should say, until about this area here. We kind of begin to see around this December, in moving into the new year, the bond yield starts to go up. And this is because of this whole recessionary fear. People are unsure about inflation, etc. So we see this correlation begin to kick in. So, we see everybody moving into, well, not everybody, you know what I mean? People moving in towards bonds as the price of Bitcoin comes down. So, and again, you have this kind of rise of I think this was when they began raising rates. But yeah, so then a little bit of movement to the downside here on the bond market because we kind of had this big push up in Bitcoin. But then again, look, we're falling down. And then as Bitcoin rises, the bond market falls. Again, this little going in different directions is what we see is like a correlation. And then again, Bitcoin starts falling, bond yields start going up. So it genuinely does show when people are not investing in crypto, they are probably investing in bonds. And this is just US government bonds. We can look at bonds from different corporations, different basically companies. When a company says, hey, I want to raise some money. But, we get worried about when we see 11 million. This is an asset flow chart showing that what money is coming in and out, basically. So coming in and out of different cryptos through these vehicles only by institutions, we get worried when 11K drops out, or 11 million. And this happened last week. So this is why I had the Bitcoin chart up. BTC USD, let's have a little look. Boom, bring me on to the daily. Yeah, so last week, we start seeing this money come out and everyone's like, oh no, it's crazy, So we do continually see this level of like, being scared. So I think that, seeing Ethereum as a potential alternative to, especially when you have these yields, to a crypto asset is a really nice way to dip their toe in first before just yeeting everything into a bloody shitcoin. So I think that's something that's really, really important. And also, obviously, if you're managing someone else's money, safety is extremely important. So ETH 2.0 will have the advantage of scalability. So they will have shard chains which can do loads of transactions. But ETH 2.0 requires a large set of validators, approximately 16,000, which make it much more decentralized, which is one really, really good thing. And as we see more people become validators, that level of decentralization only increases, because obviously there's less, if there's more computers in the network, it's harder to hack. So it's make it more decentralized, secure, and less prone to manipulation. So we're looking pretty good. I'm pretty excited at this stage about the ETH merge. I think we're in for a bloody good time. And so what I wanted to show you is exactly what is this going to look like. So right now, let's have a look at Ethereum. We are making 4% more Ethereum every year than we're burning. I don't know why that took so long. Than we are burning. And there's currently 5.5 million ETH being issued every single year with a burn rate of 0.6 million per year. Let's simulate the merge. So look, the issuance drops down drastically. Let me go there. I don't know if this changed. Yes, so we changed the time frame. I'll just show you this before on the all, So yeah, still the same. And then we are basically, growing supply of 2.6%, burn of 2.4%, and then we simulate the merge, and we actually go into a deflationary environment. So we end up with minus 1.5% of the supply every single year. So you have an asset that's deflationary, that's going to be bought up by institutions, and a lot of people are talking about it flipping Bitcoin. And there's not much reason as to why it won't. And also you have so many different projects, on there. And again, we can bring up this where we have a look at the staking. There's already, in terms of a proof of stake chain, it's already like 3 times Cardano and Solana. And these guys have been around for ages, for years. So it really does build a very, very compelling case for Ethereum moving forward. And so you can go on this website, actually, it's really cool, ultrasound.money, and have a look at exactly, where it is that all of, where are they being burnt from, etc. Blah, 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 blah. But anyway, guys, that's everything I wanted to drop in terms of exactly what I think is going to be happening after the merge. I do think coming up to the merge on the shorter time frame, we will have a bit of a buy the rumor, sell the news. So people will be getting in. It's happening in, this website shows. When is it happening? Excuse me, sir. When is merge? Here. Merge is 6 days, 5 hours, 1 minute, and 15, 14, 13 seconds away. So around about the 14th of September at 6 p.m. UTC. So this is going to be very, very interesting for us guys. Like I said, we might have a little bit of, I think there will be a pump, but overall, we still have to wait for the crypto market to begin to recover. But looking at Ethereum in this level, I think people are going to start moving into it in a very, very heavy way. And I don't see too many reasons as to why this is not a good time to get involved. But that's just my personal opinion, not financial advice. But I will be buying some. Thank you very much, guys.